What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And we've got to update the Bitcoin action since the last video. I'm getting more content in because we have a lot of changes that are going on. So we're going to do a quick look at the 4 hour, the 1 day, and the 1 week so we can make sense of this action as we still get conflicting interpretations of what is going on, and people that are still in denial that we are in a bear market, and people that are still calling for a breakout. Is the bottom in? I don't know. Are we going lower? Probably so. So we're going to look at the best case scenario all the way to the worst case scenario. So let's start out right here on the 4 hour chart. And we can see that since the last video, I was saying that the big red dashed line must hold as support, or we would be seeing much lower prices. So here we have the bounce right there where we didn't even touch on the red dash line. It got saved just below, and we snapped back up to this cluster on the VPVR, volume profile visible range. This is the clue that lets us know where the next possible movements can be on any cryptocurrency or stock. It represents the amount of trading volume that happens at a particular price instead of at a particular time, like what we see here on the vertical bars on the histogram. This is how much trading each bar is, the trading that happens every 4 hour candle, since we're on the 4 hour chart. So each time you see one of these bars, that's how much Bitcoin was traded during that time period, regardless of price. Whereas on the VPVR, we see how much was traded at an exact price, no matter what, that would contain all of the purchasing and selling within the visible range of what we see on the chart. So as I scroll out on this chart, these nodes will change, but they change smoothly. Okay, so let me just show you that real quick as I scroll in and out. You're going to see the VPVR change. Now, there it changed a little bit. You see that? The more volume we pull in, the more that it feeds into the volume nodes. So when we scroll in a lot further, we see the exact clusters of where Bitcoin is getting the volume at these particular prices. And we see that we're just above the peak node right here. Now, here's the biggest clue to let you know of what is going on. As I always say, look at the stochastic, this oscillator here. This is an oscillating chart here that follows the price action, and it cycles up and down. So whenever we are up at the top here, we look to see, well, what was the price that was returned up here? As we continue to have stochastic peaks here, we see the price was barely inching up. And then the next time that we had this stochastic bottom, we took a big tumble here. And as we stayed in the oversold zone, and I talked about us being stuck in that area, and sure enough, it did happen that way. Here we are lumbering along, and then we had this quick little dive up to this green candle, the rebound right at the red dash line, and now we're shooting up higher. Now here's the clue that I want you to consider that will make sense of this current move. We're booming up here, moving way up high in the stochastic cycle, but notice that the return on price is not as great. So we went all the way up here. We're about at the 60 line, moving up to the 80 line. And when we get above the 80 line, we're in the overbought zone. But notice how price has only gone from just above the red dash line to roughly 20,130. And then we've got a red candle forming right here. And this blue line is starting to curl over a little bit, which tells me that it could cross over. So what could happen is this, where we peak out and then start to go down again. And then we're going to have to look at the 1 day chart and the 1 week chart to determine if this stochastic will stay upstairs like this, or if it will dive downstairs like this. Then we also look at the MACD on the 4 hour, and we notice a couple of things. Here we had this peak period right here. And then after this peak period, we sail down, we come back up, glance off of the 0 line, and go back downstairs again. And then we have a crossover right here where now the blue line is on top. And it looks like we're printing dark green bars on the histogram right here. But we're not getting much of a bounce up there above the zero line. So previously we stayed up above that zero line for quite some time during this stochastic peak, during this side banding. But now we've got a little bitty bump here, and it looks like we could reverse and go back downstairs below the zero line. How far will it go? I don't know, but it looks like right now momentum is pointing down back towards the red dash line. Now, let's zoom out and go to the one-day chart and see what it's looking like. Now we can see that bounce very clearly right here. We bounced off of the red dash line and we shot up. All right, let's kind of adjust this chart a little bit and scrunch the prices down and maybe try to get a little bit more history in so we can get an idea. And notice that there's just no volume that's below that red dash line. And that represents what I like to call a slip zone. So once we go below this popular trading volume, if we don't get snapped back up to this point of control price, which is the heaviest trading volume node on the VPVR, then you can be in danger of falling into this slip zone where there's just no volume. Not very popular down here. So we could go all the way back up to the point of control, or we could peek out right now, because what do we see? We see that the candle has a wick at the top. In other words, here's what happens. Price goes up, all right, to here, and then it falls back down to right there. And so then that's why you get the wick, where the top of the body of the candle is lower than the little stem that is on top. So that says the momentum is downward, even though we're printing a green candle. Now, one good thing that we see here that we can't depend on is the possible crossover happening right here. The blue line is touching the orange line. And if it crosses over, then what usually happens is that we see it continuing on up. And that's where you start to move up. But it could be a fake out. We've seen fake outs in the past several times where we had a crossover right here. And then what happens? The blue line goes back down and hits another bottom. And we had several of these circumstances where the blue line gets back on top here, fakes out, goes back down. And then you had several fake outs here. You had a fake out here, and it returned to this bottom point. So there's no guarantee that just because we're about to cross over here, that it's going to move back upstairs and try to make it into the overbought zone. Let's look downstairs on the MACD. What do we see? We've got that downtrending line. See that line? And it looks like the momentum, we're in the red. We're printing red bars on the histogram, even though right now we have a light red bar on the histogram. But it's been flipping back and forth from dark red to light red, and now light red. And what the light red means is that we're moving towards the zero line. The dark red means we're moving away from the zero line. But after these peaks that we have here, 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 and here, it kind of looks like momentum is rounding off and we're pointing downwards. So we could get drugged back down to this trend line right here that we see more clearly on the 1 week chart. So on the 1 day, it's kind of indecisive. We could move up back to this point of control. We might get stymied right here and go back to the red line, and we'll have to wait to see if this is a true crossover. And then the MACD, which is slower. Some people like to say MACD. I had a comment on the last video, and one of my good followers said, hey, by the way, it's pronounced MACD. I call it the MACD because I guess I'm just stuck in my old habit. I've been calling it the MACD, moving average, is what that stands for. I've been calling it that since 1999 and 2000. And then when people started saying MACD, I was like, okay, Mac is not a word. It's not 2 words, it's 4 words. And I can't get used to calling it MACD. So I'm going to continue saying MACD like the old people. All right. So the 1 day is not too bad. But then when we jump to the 1 week, it's going to get a little bit more clear. Here's the 1 week chart. Let's scrunch it down, get some volume. And we see a very bearish indicator. Number one, we're at this volume cluster right in the thick of things right here, and it's trying to hold us. But if we fall into the slip zone, it's going to get ugly. If we fail the red dash line, we're going to move down. What are the possibilities of moving down? Well, let's just kind of check it out. Let's scrunch this down so we can see that overall trend line. And now, what do we have staring us in the face? A stochastic crossover that has the blue line falling away from the orange line. When these two lines move away from each other and diverge, it's a negative momentum. So it doesn't look like we're wanting to do a fake out and turn back around. This looks like a pretty good momentum headed downstairs. And we also notice that the green bars on the histogram are very slight right there. And we also see that the blue line and the orange line are smashed together right here, right just above this trend line that I drew that shows our overall downward momentum, where we have a peak, a lower high, and this could be a lower high right here. If that turns out to be a lower high and we continue that momentum, then we're going to entertain price targets that are below the red dash line. Now, what those price targets are, I don't know. It's really kind of hard to tell on this chart. Let's scrunch this down and get some more price history out of range so we can see the minutia in between. And now they start to pop out here as we stretch it out. So now we can see that we are at this volume node right here, falling away from the big one at 21.6 and the big one at 23. That was the top of this bear flag. We're still looking at a bear flag. Where's the flag? I'll show you. It's right here. There's the pole. Here's the flag. And we have broken out of that bear flag, which says that usually we're headed downstairs. That's why we notice that the stochastic is showing very bearish. Okay, so if we fall below that, what are the price targets? If we fail it, here's a node right there, right smack at about 15,955, somewhere around 15 and change. That's a possible target. If we fail the red line, another target sitting below that, which is of less probability, is the 13,000 node. And then we have another one at 11,748. And the last one is at just above 10,000. So these things don't lie. And I watch the node. So let's just put an arrow at all of these targets. And as you go down, they are of declining probability. Okay, we start here, we're at this one, we have a probability of going back up to these two, and we have a probability of going down to the node below the red dash line, this one below the red dash line, slip zone, and then 15, 11 or 12, and 10. So what's the highest probability? The highest one is going just above this one or just below this one. And once we get there, we look at the momentum, and then we can get a good idea of where we might be headed. When you combine this with what the other charts look like, we can also get a better idea of what could happen. So let's jump up to the Dow Jones and look at the 1 day and the 1 week. We're bearish. We're still moving downward. We have a divergent stochastic, the blue line falling away from the red. We have a peak on the MACD, and the blue line is down below the orange, rather. So that says negative momentum. The 1 week is looking ugly. We have a big crossover where the blue line is falling way fast away from the red-orange line. And then it looks like the histogram is in the light green, and it looks like we've got a crossover that might be happening here where the blue line is flattening out and looking like it's wanting to go down and touch on the orange line. So Dow Jones is in a negative momentum. What about the DXY? The DXY on the 1 day is actually looking kind of bullish. Why? Well, it's because we had a crossover the stochastic here and we were going downstairs. But now, as I told you before, the blue line crossed over and it wants to stay upstairs. Look at that. It flipped. And you could get this effect where you stay upstairs instead of having one crossover and moving downstairs. So if this stays upstairs again, and if this MACD, if the blue line stays above the orange line here, even though we're printing the light green, we could continue up like this. And DXY will continue to surge and it could head for like 110. That's what it looks like on the 1 day chart. Now, what does it look like on the 1 week chart? This might give us a clue as to how long that this romp is going to last. Here we have it. We've got a doji candle right now, red, which says indecision and possible pivot point. But we have a very bullish stochastic with the blue line going straight up and going away from the orange line. We also have another divergence here where the blue line glanced off of the orange and it's moving up again. But notice these peaks where we went from here and then to here and to here. They're getting lower and lower, which tells me we might be nearing the end of the reign of the dollar. So we're headed up strong and hard like this. We're way above the 50 EMA and the 200 EMA. How high will it go? It could continue a little bit more, and then that might be the end. And when this turns down, that's when Bitcoin is going to find a bottom and start to sideband and start the next cycle. So we'll have to just watch and see what the Feds do with rates. They're saying they're going to continue raising rates. As long as they continue raising rates, the dollar will be strong. But when they ease off of that, then that's where we're going to see that dollar flip and go down. So that's the main clue that I like to use in order to know where Bitcoin is going to go. That's all I've got for this video analysis. And before we go, I want to give a shout out, a big thanks to a couple of my biggest supporters with their super thanks. We've got South North with a $10 super thanks. Thank you, sir. We also have my brother from another mother, Carl, with a super thanks of $10 on the 29th and a super thanks of $10 on the 15th of August. Thank you very much, Carl. And we also had Marvin Witt on the 2nd of August with a super thanks of $2. Thank you very much for helping to support the cost of producing this channel. I appreciate that, and I'm going to keep pumping out the information for you. And I've got something special coming up. We are going to start to promote the channel membership, where you can donate $2.99 a month or $5.99 or even $9.99. And there's going to be some special rewards for you. I'm going to have private videos where there's no editing, no nothing. I'm just going to jump on the chart whenever I see something happening, where this will be a lot more frequent instead of once or twice a week. I could do once or twice a day. And each time that I see something significant, I'm going to throw that up for the members of the Crypto Club, the Crypto Pro Club. And there will also be some NFT rewards coming, because I'm still in the works of creating my first very own NFT collection to make some neat stuff for you to have to commemorate your membership in our program here. So that will be coming up soon. And last but not least, I'm going to post a link. If you would like to watch these videos commercial free like I do, you can. And when you sign up for that, you will get all of these videos commercial free, and you'll also be helping to support the channel, because they're going to give me a bonus for each person that signs up for YouTube Premium. So that's another way you can support the channel and enjoy better quality as you're watching the videos interruption free. So that's all to come. This is Carlton, and I am out.